Hey, this is Oren, and you're here, of course, for the game of money. It's the only thing we know how to do. I'm here with Lavonne again. We had such a good discussion last time that we had to do again. And the reason we're over here in this facility is our main facility is under construction. So enjoy the space here. I'm here with Lavonne. We're going to dive into an amazing part 2 to the first conversation we had. Yes. Awesome. All right. It takes all day, all week to make content, publish content, film it down, distribute it, run the various channels, comment, everything like that. Mm-hmm. And that's like somebody's job, right? And that's a job called entertainment. I have a job called finance. And we make content when we can, and we love doing it. Yeah. I love making content. Might be good at it, might be bad, but I have to do the finance first. Yes. And we have $30 million invested. We run a platform. We do banking. So at the end of the day, when the banking is done, if that's 1 o'clock, 2 o'clock, then we can make content. But we don't like make content until 2 o'clock and then go, hey, what's going on with our money business? What's going on with the money we're managing? And I think there's a lesson in there, which is when you see people who, I want to make sure not to get in trouble, who are on the gas really with a lot of content, or if maybe better, I see people going, you just don't make enough content. I'm like, you put out more quantity than quality.
You're right.
So if I hear that, like you don't put out enough content and it's more about quantity than quality. I mean, you don't have investors who need to trust you and believe in you. I remember when I first heard about a hologram, the interesting thing about a hologram is you take any little piece of it and you can create the whole image to itself. That's the one thing I remember from a 12-year-old hologram. But it's the same thing with the content. Is like any one piece of content that I put out has to be a reflection of the whole platform. I can't just put out crazy cat pajama content because somebody's going to stumble upon that. And then they're going to, the finance platform with that perspective, or God forbid something goes wrong, and then we're going to add the words your honor after that, the crazy cat pajama content. And then we're going to be explaining, oh, well, we were just kidding when we said that.
Yeah.
And so I like stuff that's funny. I like stuff that's charismatic. I like something that's cool to watch. But we manage money for people, and we more importantly, I want people to trust me that the perspective I have is straight down the middle of how our financial system works. And I don't have new and crazy ideas that I'm trying to solicit money for. And I think that's why you're here, because you have that same perspective.
Yes. I also am like, I live on the fence of making content that can educate people and like they can make better decisions with their life and all of that, and being like, so I'm doing this because there's so many people creating content selling you a dream about things that make me say, if you were really making 100% returns, you would just go in your room and never talk to anybody else. Because that's what I would do. I would just like hoard my money, mind my business, and never talk to anybody else, because I no longer actually need things, and teaching you how to do it won't add any value to my life. It'll just frustrate me because I know you're not going to listen anyway. On the other side, just making enough content. There are better solutions. Do better due diligence. Don't trust them. You're trusting too much. In God we trust. Everybody else, verification, pay cash, all that.
And that's a big thing. You always have to ask yourself, if you can pay somebody money to teach you how to make money, why don't they just skip that whole step and make the money themselves?
Yes.
And to that I say, for some reason in the human mind, there's a missing chip that goes, that doesn't make sense. If somebody walked up to you and said, hey, take my Ferrari for the day, you'd be like, what's going on here? You would immediately go, it doesn't make sense, whatever the case is. But we have this chip missing that says, and I don't know if it's because the greed is higher, but hey, I'm going to teach you how to make money that I would love to have myself, because the money you're going to give me is less than the amount of money I'm telling you could make. Here's what I learned. I'm not going to criticize anybody by putting the name, but most of the people that you would think are educators in finance or business that are from the internet or from courses or from advertising or books, everything like that, are just entertainers. That's it. Just believe me, like it takes a lot of time to get your suit ready, get your hair cut, to get your mic on, to know where your slides are, to get the slides formatted for the screen you're going to do a walkthrough, make sure your contract is in place, contract is right, that you're getting reimbursed for expenses, that they pay, that diligence is complete, that you meet with them, they know the content. Like, it's so much work to do the education or the presentation or the talks. It's a full-time job, and you don't have time to actually do the work that you're talking about doing. I want to make sure people understand, like, probably the biggest sources of content they're going to, because they're most familiar, I'm not going to name names, those are entertainers. Mm-hmm. Don't actually do the thing.
I learned that the long way, the hard way, not the hard way, because I just spent time's valuable flying around telling people who were like internet gurus, you do a thing. Why are you teaching people to do the thing when you can just have a fun to do the thing and you can give the people a return? It's so much easier than teaching people to do things, because most people aren't going to do things anyways, and you're going to be frustrated. And so what I learned in that process is selling things makes millions of dollars, and doing things takes the risk of millions of dollars, and they didn't want to. So yeah, I learned a lot, and that most people teach on the fringes of actual things, which I call, it looks like network marketing to me. So if I can teach you how to make content about making content, look at that. Sounds like MLM to me.
I think it's called, how to get money mailed to your mailbox. It's run an ad in the back of the Wall Street Journal that says how to get money mailed to your mailbox.
Yes.
$10. And it's a loop that's gone from that, and but it's all a version of send me $10 and I will tell you how to get people to mail $10 to you. And that is run the same ad I'm running in the back of the Wall Street Journal. But then eventually there's too many ads saying how to make $10. So then it has to be went somewhere else. But that's the source code. That's the DNA. That's the original sin of where this all started. Mm-hmm. Everything on the internet from coaching. And I think what happened is there was an inflection point where some people started selling courses saying you should sell courses no matter what. There's somebody out there who wants to know what you know how to do. And so now this has devalued all the courses.
Yes.
There's just too many courses, and there's no way to, and 50% of the courses are how to make a course selling courses. So anyway, I think we murdered that. We murdered that to death. I was on a call today with some people to join our private equity group. We ask investors to come, look over our shoulder, see what we're doing. If they like the deals, invest in them, contribute, and be part of the group. And they're like, what kind of mastermind is this? And so I said, most of my time, it's not a mastermind. Like, it's an actual thing. Turn people away. It's not for everybody. If you're actually an investor, then come participate and be involved in a group that's invests in stuff. And they're just constantly trying to find, like, what's the angle, right? What part of the funnel am I in? I'm like, you're not in a funnel.
Yes.
Right?
I won't be pitching you from the stage, and you don't need to extend your credit cards in any way. Okay, yeah. Great.
Last time we had a great conversation. We had a lot of views and clicks and everything. Why do you think that there was so much interest in the conversation we had?
We were having a conversation that's not a typical conversation that people have. Very fun, and also peeling back layers of things that most people just have no idea is going on.
So tell me about a deal you're in right now in which you're doing it in a counterintuitive, creative way that most people floating around at the top surface of finance just would not be able to guess at or intuit or know the mechanics, something you're doing, because it's more for somebody who does this every day.
One of the things that I've been focused on this year is, not this year because it's only January, last year, medical office with physician practices. So the business and the real estate together.
Yeah.
I like that a lot, mostly because people already, especially below a certain price point, people don't actually know how much their business is worth. So you can usually negotiate where you're somewhere around a very little bit more than what the real estate is worth. And my sort of way of doing the deals has been, I'm more a relationship person. And so building a relationship, teaching them how to limit their taxes, because everybody just thinks they want the biggest pay. And I'm like, no. Seller financing is great for you. It's not actually that great for me because I can probably get better financing terms by writing my own offerings.
Yeah.
I'm saying you should take some of the money on the backside to save yourself. Otherwise, I would just take the whole amount, and we generally will syndicate a bond or pref equity and buy the business, buy the real estate, and really reposition it to, I'm like an 80-20 person, just like business in general. You're usually doing way too many services that you don't actually do. So let's figure out what we actually offer, do more of that, and find a younger doctor who wants to be a part of the business, but that the exit for the real estate can be either to them or we're going to aggregate it and sell it in a package. We've been doing a bunch of those deals in Florida, now looking at a couple in Alabama because we're doing some like building in Alabama. So I'm just meeting business people there.
So I think of that a couple ways in that you can have those kinds of sellers. You can say, hey, look, you can have the price or you can have the term, but you can't have both. Like you get to choose the price and I get to choose the terms, or you get to choose the terms and I get to choose the price. But you can't have both. Sounds like for the sellers that you have, they want, rather than maximizing price, they want certainty. When a seller first goes to market, because we have this in this area, like a house comes up and they're like, we want $5 million for the house. They have to go through being under contract and falling out a couple times before they're like, okay, now we got to find some price point where this deal actually is going to happen. So they go in and they need to have their frame around certainty taken away to where they have lots of uncertainty. And then you show, so where, when a deal comes to market, are you willing to start talking to the seller? And then they can actually be realistic on pricing and terms.
I'm usually looking at two very opposite extremes. One is it's been listed somewhere for a very long time. And because the way that most business listing services are, they've been paying some kind of a fee. They've been in and out of contract. People have looked at all of their personal financials at this point. They're very annoyed.
Yeah.
And building the relationship and giving them the certainty that like, if the numbers work and the things are as you say they are, we will close, is a very comforting thing. And then it helps that I can be a little funny and we can eat food and drink together and I'm not trying to be transactional with them in any way. And so building the relationship really does help. On the other complete opposite side of that spectrum, which I laugh now because the off-market deals are like the worst deals in history, because I'm like, they haven't gotten the market to tell them that this is a ridiculous price. So you guys are sending me email with trash in it, but trying to make it exclusive. And because the whole world of private equity for a long time was saying, we only do off-market deals and that kind of thing. And so people built a business around selling off-market deals in emails and on platforms. But I'm like, if it's on a platform, how's that off-market? But I'm going to let y'all tell me whatever. Going the exact opposite way and just start reaching out to people who have been in business for more than 20 years and saying, you're likely on a path to exiting, whether that is by force or just because you're tired, especially physicians, because they are generally not the people who end up like completely hands off at any point. They're still seeing some level of patients. And I have a dental office and the lady, she's really bad back issues because she's been bent over for 40 years. And she has 6 locations and she's, I absolutely love it. But my back and my leg said, I am finished.
They're looking for certainty. So how are you giving them better certainty than other people who have come to buy the business?
Most of it is that like I can show them closed transactions that we've done recently. I can also let them meet other doctors that we've done deals with and stuff like that, which becomes like, okay, you're not just another person calling me to lock up this business to sell to someone else on some other email list. It also helps that we have our own money that we're also putting into the deal. So it's not just a complete like, we hope we can raise the money by the end of the term that we are giving you. So those things all add layers.
Yeah, I think that is the biggest shortcut that I talk to people about, is just going, when somebody comes in to do a transaction with you, to invest, to buy, to talk about funding, is going, what is your source of capital? Is it captive? Is it a call fund? Or are you just trying to get something under contract and then go look for capital? Which one is it? You've got capital, you've got call capital, or you have hopium capital.
Yeah.
And all work.
but
None of those are illegal.
But no one asks.
No one asks.
So I used to teach realtors that. So one of the businesses that we own is a mortgage company. And the realtors are all like, we're only taking cash offers. I was like, do you actually know what cash means in this transaction? It just means that you don't have a finance contingency. No one gives a damn how the money gets to the table at the closing.
Right.
So if I came with a check from somewhere else, you'd say, nope, I'm not doing the deal.
Right.
Of course you wouldn't. So don't take people's cash offers to be cash money. You need to ask, what's the source of this cash?
Right.
Are we talking cash in the bank? Are we talking callable capital? Are we talking once you get under contract, you're going to go out to the market and find it?
Right. And I would say, what percentage of people would you say represent search capital in the sense like, hey, I want to get under contract. I generally know people who like to do the thing. If I have something on contract, I can go talk to them about it and I'll just get a RIP or a carry in it, but we don't actually have capital that we can deploy.
95.
Yeah.
And then you have
So
5.
just stick on that. So 9.5 people out of 10 people that you're talking to about money don't have money.
Yep. And then you have 3 that have callable capital. And most of their investors are pissed off because they've not called the capital in a long time because good deals are scarce if you don't really know where you're looking.
What are the signals of somebody who's walking around with actual investable capital?
They come in with really specific, this is where I am and this is what I am willing to pay. And they're way more, this is a take it or leave it scenario, because when you have that investable capital, your ego's a little more like, I don't have time to play with you and the people who've been playing with you. So either you accept as this, or these are my terms and this is my LOI, and are you going to agree, or I will move on. That's 1. 2, I would say they are easy. They will generally just tell you, I have the capital, I have a fund, this is the capital that I've raised, whatever, or I just sold a business and here's my personal financial statement, or I just have money, mind your business, here's a bank statement, I'm going to buy the thing.
Yeah.
They're not hiding where the money's coming from.
We're looking at making a $50 million acquisition, right? And the seller said, hey, we want $46 million for this asset.
Okay.
And so my team was, hey, let's write an LOI and get it under contract because we really want the asset at $46 million. My opinion is we don't know what the asset is actually worth. That's their price. We want it under contract, right? But we want our word to be good. So before we get under LOI, we want to know, how did you guys get this? So normally when you go to buy an asset, we're doing the underwriting and then we're making an offer with our price, because we looked at the asset, we underwrote it, and we said, okay, we're offering you 42 million or 52 million for the asset because that's what works for us. And our offer is good based on the underwriting that we did. If they come in and say, hey, we want $46 million for the asset, we don't want to just offer them their price under due diligence conditions, right? Even though we won't have to pay more or less unless we want to. We just don't want to be known for, so if we come up and say the asset is only worth 35, we don't want to be known
As the retrader?
as submitting an LOI for 46 and then come back around as 35 and get a reputation as a retrader. I think that's a good way to understand that you have a counterparty who's actually looking to close as they're doing the work before they're making an offer.
That's been an issue I've seen with on-market stuff, because they'll be like, we need an LOI to give you the information. So you want me to lie to you, make something up based on this one sheet? And so for me, that's always like so is this your first business you're selling? Or like, whose idea is this? You are willing to hold this business captive because you won't talk to other people for a certain amount of time, and without vetting us and without us vetting the deal, is probably a waste of time on both sides.
Right.
Which a lot of people do that though.
When we issue an LOI, it is not a one-pager, one paragraph. Like, subject to due diligence, we contingently offer $12 million for the business, subject to normal closing conditions, further agreement, and a non-binding solicitation and letter of intent. One paragraph, not even a whole paragraph, like 2 sentences.
Yes.
When we make an LOI, the way you'll know it's coming from us is it has enough depth and meat and potatoes in it that it can be converted from an LOI to a definitive agreement. Because all the basic terms and conditions, which still need to be subject to legal interpretation, are in the LOI. If you're either giving an LOI or receiving an LOI, it should have sufficient detail that you could hand it to a lawyer and say, convert this into a definitive agreement, which can then be converted into a purchase and sale agreement. And to me, then you're in a much more, the buyer seller has done enough work to write it up and say, okay, we can give this a legal turn in agreement. That agreement can then be negotiated for nuance, timing, additional terms, market conditions, and then be moved efficiently into a purchase and sale agreement. That is the steps of a credible buyer-seller relationship.
I agree completely. What's your favorite financial document?
Oh,
Mine is the statement of cash flow.
Mine is the pro forma.
Okay.
Growth pro forma.
From them or your own?
Theirs.
Okay.
Because that is where I get leverage. Because I made pro formas for a living for 15 years. So there's always somewhere that it breaks. So for example, what happens is in a pro forma, in order to make it smooth, there's somewhere as you go deeper and deeper into it where there is an assumption condition that's not physically or humanly possible. So for example, if they say, okay, we're going to grow from 10 million in 2025 to 20 million in 2026, right? So they're going to show that as a smooth curve.
Right.
But then as you zoom in, you're like, wait a second. Are you telling me on December 25th, you're going to get 7,000 orders, right? No, that's Christmas.
Yeah.
So we wouldn't. All right. So you're not going to get those. And so where are those orders going to come in? They're going to come in somewhere else. And so then, okay, if you put those somewhere else, then another assumption breaks. And so you start pulling on threads and you go, because everybody wants a pro forma to look smooth, handsome, and digestible. And it's not, but real businesses don't work like that. So the more you zoom in, there's somewhere the assumptions break, and then you can call them out on the pro forma. And the other place is pro formas only work really well when it's a pure startup, which we don't do. So if you zoom, for me, the key is if you zoom is for their existing business to where the future business starts. In order to make that curve smooth, there's always an unrealistic assumption.
Yeah.
And 9 out of 10 times, they're publishing historical data that is inaccurate. So I love the pro forma because I can go, wait, how am I supposed to believe these future numbers if you're not even publishing accurately your historical number? If you do a deal with me, that's one of the top 3 most likely things you're going to hear. Hold on, I'm confused. How do I put any belief or trust in these future numbers when your historical numbers aren't accurate? And companies seeking money will always publish. They just have some gap between they've been publishing a pro forma for a while, and then they haven't updated their current numbers in it. So I go, did these numbers happen? No, right?
How much?
Because it's April.
Off.
Is this what happened in April? Right? They're like, no, that didn't happen in April. Okay, it's now May 5th, and you just published me because it's an older document. And to be fair to them, it's hard to update it every single month. But my job is not to be fair to them. My job is to negotiate.
That's right. I like that. I like that perspective.
What is your number one pet peeve during the early parts of a deal?
If it is listed with a broker and they're doing too much to not let me meet the owner or the seller. No one wants to cut you out, guys. I want you to be paid. I want you to be paid fairly, but I don't want to talk to you every time.
My number one pet peeve is getting financials in a PDF.
Okay.
Because I can't do any testing. I can't stress test it. I can't do anything with the numbers, right? Because that tells me you haven't done any analysis. You just exported. You go, oh yeah, we have a pro forma. All you did is your accountant exported QuickBooks. You don't really have an assumption-driven pro forma in which you can model. And so everything to me comes back to model.
Yeah.
The model is an agreement of how a stabilized model says this is an agreement with management, the board, the investors, and the business owners of how we're going to run the business. So if you don't have a model that everybody's bought in on, you don't have an agreement with everybody on how the business is going to run. You just can't run a business bigger than a frozen yogurt stand without a model.
What's your buy box?
My buy box is something where it is out of the valley of death, where the deal can still die.
Okay.
Right? I want, number one, is I want execution risk on the business, not can we make the product? Will somebody buy the product? Will the competition overreact to the product and kill it because of pricing? Do we have marketing? Do we know how to market? Product to market fit? Is there a team? There's a team in place who has run this business before. Number two, I don't have to do anything with the product. There's product to market fit. The company has access to capital. The story is like easy to understand because I got to eventually go sell this business, right? And don't want a difficult story to tell. And there's numbers that I can, there's a model and numbers that I can look at. So that's the buy box. And mostly that means the business has emerged from being conceptual to being an operation. So a business that has a operational foothold and can actually grow if you execute well. And we're not trying to still invent, figure out, recruit, establish, report, and figure out, is this a business? So it is a business, and that's one. Number two is we can put this into high growth mode by doing things that are easy for us that most people don't know how to do. So governance, modeling, access to capital, strengthening of the management team, taking the capital needs of the business into the deep economy, which we talked about last time. And we can provide, we can do banking things that we can do from our we can do things to the business from our offices, changing nothing about the way we run our business and make that business better. So money, and the only thing we can do is really add money and governance. So money makes the business better. Doesn't need better ideas, doesn't need better product, doesn't need better customers, doesn't need better marketing. We could just put money in it and that will be a better business. So I think that's in the buy box. And then then also that it's on macro, it's on the current macroeconomic condition of the economy.
Okay.
So by that, what's happening from the administration and in the economy? Administration is feeding the manufacturing, the onshoring of manufacturing. The administration is loosening regulations on energy. So doing a fintech for solar energy, something the administration is not supporting in any way at the moment, versus just drilling for gas. So is it in sync with what the administration is giving loose regulations into versus tightened regulations? Is it in sync with where interest rates are? So does it need debt or does it need equity? And then is it in sync with consumer preferences? So I say this all the time. You cannot make The Hangover because the movie.
Okay.
You cannot make the movie The Hangover or Hangover 2 or Hangover 3 because people don't think that's funny anymore.
Okay.
It's either misogynistic or it's culturally, it's just, people aren't laughing.
You're not allowed to do those things anymore.
And so consumer preferences are not for Something About Mary, The Hangover, Saw, Blair Witch Project, right? They've moved into some other theme. So consumer preferences today are not for go to shopping mall, walk to shopping mall, because you could just get stuff on Amazon and you can ship it back, and so you're lazy. So what is it in sync? Consumer preferences are towards luxury. They're towards fast fashion. They're towards DoorDash and easy. Why should I go out and spend an hour and a half and the same amount of money, eating out when I'm just trying to get food? So I can just DoorDash that food in and keep doing my, work. So whatever I think the consumers are leaning towards, that it has to be in sync with that. So is it where is the Fed in terms of interest rates, and where is money leaning into? So that is it. Is it equity? Is it debt? Or are you just trying to power the business out with revenue? What do consumers really think is worth spending money on, and what are they doing with their money? And then, is this a real business, or are we just trying to figure out if it's a business? And then, is it is this a business that should be done in Silicon Valley? Okay, because I don't have enough money, I don't have enough relationships here in San Diego to compete with even the worst operator in Silicon Valley, because they can just go, Starbucks, like, oh wait, you're a coder? Right? Yeah, I was one of the first CTOs of Facebook. Hey, do you want to do this AI dating site for grandmas? Let's do it. Roll, right? Hey, come on, team, right? You're like, wait, you have 5 coders with you? Yeah, we're just looking for something new to do, right? And then the manager of the Starbucks comes over and he's like, hey, we rented too much space. Do you guys want to like lease this office here? Like, I'll take equity startup and we'll give you operating space. And then you're like, oh, I'll call my buddy. Now that we have all that, he'll install the servers. If you got servers and you have a coding team, my buddy just got $100 million in his venture firm. I know he'll put $10 million in, and like, all you wanted was a cup of coffee, right? And now you have $10 million in on a $100 million valuation company, and you haven't even had your bagel with cream cheese yet. So I'm like, I can't compete with that.
I agree. As much as I really don't believe in things like the whole finance world is moving to Miami, allegedly, because a couple hedge funds moved. And I said, what they'll realize very quickly is we don't have any talent. So who's going to work there? Are you going to just fly people in, and you know what happens? They're going to get the cancer of Miami, where everybody just goes out to eat at 11 a.m. and they walk their dog and they live in a building that costs $25,000, and they're figuring out how to pay their bills. They're like, I don't really work. No one works in Miami. So yeah, you don't bring serious businesses to Miami because there is no talent.
Exactly. So that is, I don't want to compete with the talent, the money, the speed, and the smartness of Silicon Valley. So is this a deal that when they look at it, they're like snooty about, right? Looking down their nose, but like, right, that's not a thing. And we would never do it. And I'm like, that's inside my buy box, because I need the eye of Sauron to like scan over it and go, nope, these are not the droids you're looking for. Mixed movie metaphor, but I need the pros who do this kind of thing to go. So my buy box
is everything they don't want
outside of their buy box, because we're not fast enough, smart enough, hard enough, compete enough in a right geography, and can snap in people fast enough. But I'm not going to do an AI deal.
Right.
Because no matter what it is, like, people come in all the time, oh, I'm doing this AI deal, that AI. No, they're just going to have their AI do your entire AI. They're just going to say, hey, if some dumb AI deal comes up in this category, just take it away from them. Here's my credit card. So I'm not going to do an AI deal because
I call that the too hard list. If it's so hard that I can't explain it, I don't know anybody who knows how to do it themselves, I'm out. Like, I get it. You're going to make $1 trillion. Just bring me back 10 million.
Yeah, too hard. My buy box experience has to matter.
Okay.
So it requires people who have a career in doing this thing. And so that's another way of saying it's not on the bleeding edge of technology. Because there's a geography and there's people who do that.
Okay.
So what it requires is somebody who has actually run a $50, $100 million business that we have in this business. And experience matters. You can't just... So I think what we're finding out now is experience matters. And you can't... So we went through an era, say, 2010 to 2020, where being a coder, where if you could code and do technology, you could just roll into some business you didn't know anything about and code the shit out of it. It's called like DoorDash, right? Like, this guy, I don't think those guys operated like food distribution. They were like Cisco.
Yeah.
The Airbnb, they were like, it'll be cool. I think that started, like, those businesses were just coders and they pivoted 4 or 5 times, found product to market fit. So I want a business where you can't just get 4 smart coders and they can just roll through your entire industry. It actually requires experience. So for example, and we can start to wrap on this, in our stone manufacturing business, you can bring in all the smart technology people in the world, but these are 60-ton machines and they use thousands of dollars of raw material to make something that goes into a consumer market. So one, like running these 60-ton machines is not code. It's there. You actually have to know how to put raw materials in, how to do the chemistry on the raw materials, how to set these machines up, how to get operators. Then the finished goods have to come out the other side of the 60-ton machine, complete and good and workable, because you can't screw that stuff out. But it's a fashion product. It's a stone countertop. And Mrs. Jones, Mrs. Smith, whatever, welcome to America, Mrs. Homeowner has to go, oh, that's beautiful. Let me show it to my designer. Oh my God, that's amazing. Yeah, that's like browns and texture, and it has to be on consumer preferences. And a 22-year-old coder who eats Snickers bars 3 times a day at their desk has no idea what Mrs. Jones in Sioux Falls actually wants to put in her home. That requires design and relationships and depth and attending all the shows and installing and conversations and being in the design business. Can't code your way through that. And so that's why that's one of the businesses we're in, is because it takes experience, not code base.
That's actually interesting.
What are you working on that people should be paying attention to?
I have a soft spot for athletes and entertainers and things.
Yes.
People who have sold businesses, they just have a lot of money and they're being vulturized by the people who are like, I just want to have a little bit of the money or all of it so I can manage it. And I'm really working on building out I call it the 5 R's. So helping them reorganize, retitle, recapitalize, reinvest, and retire rich. For real. But most of that comes down to you doing those things, privacy, asset protection, and then let's find you some actual real businesses to invest in, whether that's private credit, right now private credit is still good because rates are still high. So it's still a nice place. Private equity, all of the things before you go and do all of the sexy venture things. Let's get in some of these deals where you can get the cash flow and the future growth so that you can retire rich for real. And so I'm doing more outreach to commune them. No classes, absolutely not, no masterminds, but maybe a once a quarter, let's hop on a Zoom. I can teach you things. If you need actual services, you can come and get them. But
very nice.
That's where my focus is. And other than that,
because most athletes have 2 R's, which is the rut row. Rut row. I had a financial manager. He put me in a bunch of stuff. He was clipping 50% rips on the investment. None of the stuff worked out. A lot of that was with his friends, and now I'm stuck with not enough to live on, and I'm rebuilding.
Yeah. I literally had a conversation yesterday with a guy, and he's saying, I'm going to put $20 million in this casino deal that's going to be in some obscure place. And I'm just like, okay, so I want to tell you that you should look at this as a person saying that you can drive their Ferrari today. Because a person who really is on the path to have a casino license wouldn't come to you that they don't know and ask for that kind of money.
100%. Why would they want me in this deal? There's a Star Trek movie where the ship gets hijacked by somebody who's found God. Do you know this?
No.
Wrath of Khan 2. So Khan hijacks the Starship Enterprise because he knows where God is. And so they gets on it, and he makes it fly through this like plasma cloud. On the other side of the plasma cloud is like this unknown space that nobody knew about. And then God comes out, and they're like, everybody's like, it's God. And God is this booming voice, and it is God, right?
Okay.
And then eventually God is a vengeful, wrathful God. He's not the Charmin baby, right? The squeezable Charmin. And he's like, I will now take your starship. And everyone's like, yeah, of course. God needs this Enterprise. Take the Enterprise. And James T. Kirk, Captain Kirk, goes, excuse me, sorry. Why does God need a starship?
Exactly.
And that's the key, right? Just remember that. If you have some affinity, watch Star Trek with my dad. So I always remember, but if you have an affinity for that, just remember, why does God need a starship? That is your watchword. Why does somebody having a gold mine? There's people who do that. Goldman Sachs will do that. Morgan mining investments. There's mining companies, hedge funds. There's people who know mining, right? Why would somebody who has a gold mine need you when there's real people who do that? And why do they need your $100,000 when there's guys who know how to put $100 million into oil, gold mine, crypto, software, reviving Radio Shack or Toys R Us, whatever it is? There's people who do that professionally. Why do they need you?
Yes.
Why does God need a starship?
I think it's super important to just being invited to participate in people's private deals definitely should always start with a why me? Where'd you find me? I do believe that everybody should be in private deals. However, how you get to the people is important. Yeah. So if someone can say, I'm going to turn your 20 million into $1 billion, they're probably lying. Because if they could do that, they would just go to anybody. People who are trying to rush you through due diligence, who don't want to give you all the documents, who don't want to meet you in person. There are so many like little, why do your spidey senses go off for all the wrong reasons? But never the right ones.
I would say if you have a little bit of experience with deals, you need to get in with some people who do that kind of deal in your style, inside some kind of community. You cannot just be out there running lone wolf, looking for high return, doing the work on your own. You need to be matched up with people who are doing the same thing.
Yeah. Go to the expert of the things.
Yeah.
Yeah.
Yes. Awesome.